the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell it. You have a lot of anticipation. A price moves up. The event happens, and then especially fast trading organizations sell on the news. But beyond that, that I think will be just maybe a very short-term phenomenon.
In her latest interview, Cathie Wood, the CEO and founder of ARK Invest, issues a cautionary note for Bitcoin and the cryptocurrency market. She suggests that the impending Bitcoin ETF approval might turn out to be a sell-the-news event. Cathie argues that the considerable run-up in Bitcoin's price leading up to the ETF approval could lead to disappointment among investors once the approval is confirmed, potentially triggering a sell-off and subsequent price decline. However, viewers are encouraged to stay tuned until the end of the video, where Cathie delves into the enduring medium to long-term impacts of a spot Bitcoin ETF, emphasizing the importance of not underestimating its significance. Cathie Wood also shares insights into her outlook for both Solana and Ethereum in the interview, providing a comprehensive analysis beyond the short-term market fluctuations. Her perspective offers viewers a nuanced understanding of the potential implications and future developments in the cryptocurrency landscape, acknowledging the importance of considering both immediate reactions and the enduring impacts of significant market events.
Yeah, well, after being denied a few times without any questioning, to be questioned back and forth this time around has been very encouraging, and also shows the depth of the SEC's knowledge of the issues and understanding of them. So we're quite gratified and, hoping. Yes, we're very encouraged with our partner, 21 Shares. I think we've crossed every T, dotted every I. We believe to the SEC's satisfaction. I think the messaging around the 29th is, look, if you're not going to be ready to go on or around, let's say, January 10th, then do not submit anything more to us because we have too much to do here. And again, that also is encouraging because it feels like a bit of that the SEC is setting a deadline for itself. So that's great. Yeah, I guess the biggest controversy, and this is in the press, but I'll highlight it because I think for most of us, it has been, wow, are they going to allow in-kind transactions? So, limiting the tax impact of transactions, or is it going to be primarily in cash? And I think, as has been reported widely, I think it's cash, not in kind, at least at the outset here. And I think there are just a few people within the SEC who are just somewhat concerned that banks will be forced to touch crypto. We're not sure they will be, but we're talking about something very technical. So to answer your question, yes, very technical. But that has been, I think, the big issue as we head, hopefully, towards a resolution. Well, I do think there will be repositioning for all kinds of reasons, but I do also believe that the SEC approval will be a green light for institutions who have been holding back. Now, we've had a big anticipatory move here. It wouldn't be surprising if we saw a sell on the news. That's an expression in the market. Sell it. You have a lot of anticipation. A price moves up. The event happens, and then especially fast trading organizations sell on the news. But beyond that, that I think will be just maybe a very short-term phenomenon. I think that the institutional push into Bitcoin will be quite significant to the price. In fact, in our price expectations going forward, the biggest contributor is institutions. As they move, they don't have to move very much in. They can move, there are trillions of dollars in assets to be allocated. If they just move in 0.1%, forget about 1%, but even 0.1 or 0.2%, that will move the needle, especially as we know, the number of Bitcoin outstanding right now is about 19.5 million. And the further that number, the furthest that number is going to go is 21 million. So the scarcity value as institutions move in will begin to move the price, we believe. Well, as with any new ETF, it takes a while to educate investors, asset allocators, advisors about these new offerings. So slow as it goes, but the most important thing that's happening right now is, we're watching the plumbing, and the plumbing works. That's extremely important. 21 Shares is the largest pure play ETP crypto provider in the world with roughly $2 billion in assets. So that has been mostly in Europe. This is in the US now. And so we wanted to make sure the plumbing works, and it's working beautifully. And I do think that a spot Bitcoin ETF will stimulate, once institutions and other investors have a toehold into the space, they will want ways to diversify. And so we wanted to be ready with those 5 strategies to help with actively managed diversification strategies. Some are lower volatility, some are more diversified with digital asset equities. So again, we're trying to be, shall I say, a go-to for anyone thinking about investing in digital assets. So we're very optimistic about Coinbase. Now, if you, I'm going to go back to what I mentioned about institutions. Institutions don't want to bother with custodying and so forth. They want and tax issues and other infrastructure. They just want to be able to access quickly Bitcoin and other digital assets. We think longer term, and so if we're right, a spot Bitcoin ETF will be the most liquid way to access exposure to Bitcoin. And I think that liquidity and the ability to move in and out quickly is going to be important to institutions, because some institutions, yes, will be buy and hold. Others will use the ETF really as a way to play a new asset class. And they'll want exposure at times because the diversification increases risk per unit of, increases return per unit of risk. So I think they can't ignore it. And so this is a very good way to access it. Well, I think something happened this year that will continue to inform investor decisions. Bitcoin appreciated during the regional bank crisis. So as the KRE, the regional bank index, imploded and Silicon Valley Bank went under, Bitcoin appreciated in the middle of that crisis roughly 50%. And so we have a new role for Bitcoin, and that is not only a risk-on asset, but a risk-off asset too. Think about that. And why is it? It is because Bitcoin, unlike our banking system, does not face counterparty risk. It is completely decentralized and transparent by wallet address, right? And so our on-chain analyst, David Boyle, can watch the network all day long and see movement and spot unusual activity. And we certainly saw that last year as Celsius was going under and others. It was Bitcoin that didn't skip a beat. So I really think it's proved its mettle. And that is informing institutions. They may not have liked it at one point in time, but that regional bank crisis spoke volumes. Now, so we look at Bitcoin as a hedge also against both inflation and deflation. So think about that. We have a risk-on asset and a risk-off asset. It's a hedge against inflation, much like gold is, because its quantity is fixed out there. And then it's a hedge against deflation because of this notion of counterparty risk, not subject to it. So it's going to play a lot of roles in a lot of portfolios. And our forecasts are over 5 years, and over a 5-year investment time horizon. We do think that it will, for some people, take the place of physical gold. So that's a big mover. We also, as I mentioned, institutions will start with 0.1, 0.2, maybe going to 5% if our analysis is correct. That's what usually happens with a new asset class. And then we have the emerging markets. If you noticed, El Salvador and now Argentina, both of the presidents of those countries are supporting Bitcoin. And why? Because they've watched themselves and their populations, their purchasing power and their wealth being destroyed by bad monetary and fiscal policies in those countries. And that's not just true of those two countries, it's true elsewhere in the world. So we would not be surprised to see Bitcoin become legal tender in many more emerging markets. That will be another very big use case. And then related to that somewhat is remittances. It's easy to transmit once people have wallets and understand how to do it. Bitcoin for little or no charge at all, whereas going through Western Union can cost 8%, 10%, 23% in Nigeria, of even $100 as families in the US try and transmit or remit funds back to their families in emerging markets. Well, we do think that smart contracts are going to grow in importance as decentralized finance continues to develop momentum. And both of those are smart contract networks. Each of them has benefits and some trade-offs, but we think both are winners. And to have watched Solana after last year's controversy with FTX being such a big supporter of Solana, and to watch the developers stick with Solana speaks volumes to us. I always say follow the developers, and they certainly stuck with Solana, and they are also scaling in terms of Ethereum as well. So we think those are two powerful networks in the decentralized finance space. And we also think that this notion of DeFi, decentralized finance, that, if people just start looking at it and thinking about it as simply the internet financial system. The internet in the early days was never conceived of as hosting commerce or financial services. And so developers back then didn't build in that capability. All that's happening now with Bitcoin and Ethereum and Solana is developers are building in native currencies and much more streamlined, fewer intermediaries, streamlined ways of dealing in the financial system. Much more efficient, much more productive, just like the internet itself.
Cathie Wood provides insights into the potential impact of the Bitcoin ETF and shares her thoughts on Solana and Ethereum. The cryptocurrency realm is dynamic, and although short-term market shifts can be daunting, it is crucial to maintain focus on the medium to long-term possibilities. Cathie emphasizes the significance of contemplating broader perspectives beyond immediate market changes. In her analysis, Cathie Wood underscores the transformative potential of a spot Bitcoin ETF, highlighting its expected substantial impact in the long run. Her viewpoint encourages investors to look beyond short-term market fluctuations and consider the enduring implications of significant developments in the cryptocurrency space. By recognizing the ever-evolving nature of the crypto world, investors can navigate market changes with a more informed and forward-thinking approach. As Cathie delves into her insights on Solana and Ethereum, viewers gain valuable perspectives on these specific cryptocurrencies. Her commentary goes beyond immediate market reactions, providing a more comprehensive understanding of the evolving landscape and the factors that contribute to its continuous transformation. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.